doing. So in this video, I'm just going to go through the thought process behind oil, because as I mentioned a couple of days ago, oil then turned from into a trade where you're then looking to make money. It then turned into a trade where, okay, now you're looking to minimize losses, right? So at one point, just to paint the picture, between three trades, this account was at like minus 620 at one point when it came down here. And what happened was, as it came up, I had it in three positions. One position is up here, which is quite high upon here. This is position two. Sorry, it's not. That's a stop loss of position two. And position two was around down here, and then position three was down here, right? So position three is now closed out in profit. Position two was in drawdown. I closed it out. At one point, it was at like minus 200, 300. I closed out at minus $14, right? So if you, that's based on a 76 grand account. So if you have 10 grand in the PAM, that's literally going to be like $1.60 or $2 or something, right? It's absolutely nothing. This one here is the last remaining one. Now, although I still believe it could push up here, right, and retest this area, definitely, and even retest this area to potentially stop out at break even or even here at a smaller loss. I closed out the previous one at minus $14. That's just purely good risk management. Here's the thought process behind it, so that hopefully you guys can, learn from that. So when I had both options open here, one, it was down here actually. Where are we? It was actually down here, right below here. So this one is at like minus 229, which I have now moved up to here. If you want to know why I've moved up to here, it's because if we go to the H1, we do have, where are we? That's not even closer. 156, there we go. We do have an area here. You see that? The small descending candle with the large engulfing. So what may happen is the market may come down, retest this area here, and then fly, right? Now, if it stops me out, excuse me, it's going to stop me at $156, okay? If I closed it just now, it's going to be $106, which is actually very small. It's still tiny. It's probably going to be about $5 or $10 on like a 10 grand account, right? Now, if we look over here, another thing that may happen, right, as we've got the three painted here, this could just continue to push up and the three jumps across. Excuse me. However, you never know that, right? What also could happen is this market could come back down here, straight back down, retest this area here, and then push up again, right? And that can happen over the next 4 weeks. Now, you'd have to ask yourself the question, am I willing to let a trade go from being at minus $14 all the way back down to minus $600 just to see if that plays out? The answer, of course, would be no, right? You'd rather cut it's at $14, which is like $1.80 on a 10K account. Let the market come all the way down, without increasing your risk because you're already out of the trade. And then if it does come here and retest, then you could re-enter it and go. But you're not letting yourself come back into drawdown for being, minus $14 to minus $600. Even although that $600 is well within your risk, right? You don't want to be putting it on the line when you really don't have to. This one here, I could close now at 108, right? So you then have to ask yourself, am I willing to take the risk of it only being $156? So on a 10 grand account, that's probably going to be about $5, $10, $15-ish, right? Am I willing to take the risk of that coming down here? I'd say probably about 15. To come down here, that it may retest, reject here, and then fly. Yes, I am willing to take that risk because $150 on a 76 grand account is peanuts when it's broken down into individual accounts, okay? It's absolute peanuts, and that's why I'm willing to take that risk. If you look now, I know the balance says 89 grand. That's because other people have deposited into the PAM. However, at the time when these trades were taken, there was 76 grand in there. All right, so it's peanuts. The last trade that I closed out is like 0.019%. Or 0.01%, you could say. And I risk 0.25% per trade. So in terms of risk management, it's actually very good risk management. It's minimum losses, okay? There's 4 things that can potentially happen in trading, and you want to eliminate one of them so that there are only 3 things, right? The 4 things that can happen is big losses, Small losses, small wins, big wins. You want to eliminate big losses so that your only three options are small losses, small wins, big wins. That's what you want to be trying to achieve, right? You don't want all four options on the plate where you could potentially be losing big. Okay, you don't want that. So that's pretty much it for oil. I'm still holding out on this, potentially pushing up. Let's come to the H4. This could absolutely, break past here. But as I said, look, when we look on this one, which shows my MT4 template, it could break around here. Boom, 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 bang here, retest here, and then go, right? And that would just put you in massive, massive drawdown when you really don't need it. So I would much rather prefer give it a chance, give it a chance here on the H1, come back down, retest this zone, carry on, or if it stops me out, it's stopping me out at a very small loss, okay, which is absolutely fine. Now let's have a look at other pairs that we'll potentially see. There's nothing, guys. There is honestly nothing right now that I would look at. Yes, we've got UJ here, which is in a perfectly fine area to trade from, right? There's nothing wrong with that. However, personally for me, I'm looking to enter when it gets to this area here. I want to see it break above, show some good momentum, come back, retest, reject here, and then push up, right? That's really what I'm looking for. So as far as I'm concerned just now, I'm not looking to enter UJ. I think it could potentially come back down here, right? And I'm just going to bide my time on that. I'm going to quickly run through these pairs. There's nothing here that I would take. Nothing here. Nothing here. I mean, it has came back down and retested, but I'd like to see a deeper retest. I think what could happen is it's probably going to come back, retest here, and go at this. Bish, bash, bosh, right? Well, you'll probably get this. Boom, 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 boom. Like this, all right? And then it could potentially move up. That's kind of what we're looking at. So I'm just biding my time, guys. Nothing here that I'd really be taking as it's breaking past this. You could move that across there, drag it across, see what it does here. But again, I wouldn't be taking it. It could just melt here as well. Euro AUD has panned out, but yeah, as I said, it's not one that I fancied in any way. Just because there is a trade there doesn't mean that you have to take it, right? It's very important. A lot of people don't understand that. Just because there is something you can take doesn't mean you need to take it. I'm very, very selective in what I choose because I am managing other people's accounts as well, right? So I don't just take any Tom, Dick, and Harry trade. EJ, look, it is in our zone. It is going long, like we predicted, weeks and weeks ago when the market was still here. But one thing that I am taking into consideration is that the market has now broke below the 200 EMA. You see that? And what do we always say? Look, when markets are above the 200 EMA, you're looking for buys. When markets are below the 200 EMA, you're really potentially looking for sells, right? Of course, fundamentals outweighs that. Areas of value outweigh that and so on. Yes, it does. But this, if I was just to ignore that, then I would be ignoring something which I've previously highlighted as a potential indicator, right? To say, hold on a minute here. If this doesn't break this zone, we could be looking at future and further lows. Okay, so I do need to take it into consideration. What have we got here? Potentially got a buy here. We need to wait to see it's on the daily. So remember, there's no rush for my entry. You'd need to see this candle close first. If it closes bullish, you could enter and then take it up. I'll put that in the group. What is that? Euro NZD. I'm not taking it, but I could give it to the group. Look, you can see how it's worked out spot on here, right? Bang, bang, away it goes. I wouldn't touch it. It's not a good trade. Look, it's not a good pair. If you're wondering why are you not taking this, I bring these ones up in case you guys want to trade them. You can, but with pairs like pound, Aussie dollar, I'm just sick of them because it's the kind of pair you wait in it for 3 weeks and you make 20 quid. It's like that was fucking pointless. So that's why I just don't bother my arse trading them. I have them on the screen in case you guys want to take them. You can take them. This one I would be interested to take. Yeah, but I'm going to mark it up as I'm looking for a sell here. So I really want to see this. Look, bang, bang, bang. Here it comes and melt. So you've also got a second area here. It's very important to look to the right. What have you got here? Potential zone here. Why? When the previous support is broken, it then becomes the new resistance, right? So it may come to here, it may not. It may just come here, retest, reject on a 200 EMA, and then drop. So you may have an entry here or here, okay? GGA, again, look, it's came into your zone and went, but I can't explain to you why I'm not taking it. It's just time on the charts, guys. I've done this for so long now. I seem to know when it's right. My intuition, right? My intuition kind of knows this is the one I'm looking for, and this is the one I'm not. Even though I've predicted this and said, look, if you want to take it, here you are. You know, it doesn't mean that I have to take it. Again, intuition goes a long way once you've been trading for a while. Stops you getting caught out. Yeah, there's nothing here I would take as of yet. Excuse me. Yeah, if I was to take this for a sell, I'd be waiting to see it retest this zone here, to be honest. I wouldn't trade that. Why? Because both pairs are weak. Could you trade it? Yeah. You know, you could sell from here. It's an area of value to sell from, look. But, yeah, again, fundamentally, both economies are weak. So I don't trade a weak economy against a weak economy. I only trade strong against weak. Weak against strong. That's it. There's nothing here yet. I mean, this could be a potential sell, but it's not one that I'm taking. I'll probably give it in the group if any of you guys want to take it, but it's not one that I'm taking. And that's it, guys. There's nothing here that I would be taking just yet. All right, absolutely nothing at all. Just need to write this out and see what happens. Let's see, silver. Silver's coming down from this zone. Yeah, it would have to, for me to buy it, it really needs to push up, break beyond here, come back, retest, enter here. All right, this is already played out, so I'm going to close it. I'm going to remove it. Yeah, that's pretty much it, guys. So there's nothing at all that I'll be taking right now, especially on the managed account. I will be here all week, so I will be sitting watching how the markets play out. As soon as we get an opportunity, I will be taking it. Don't you worry about that. But as things stand just now, there's nothing. There's not even in this that I would take right now. Okay, because it has to, in order for me to take it, it has to come back and retest this area. Otherwise, I'm not touching it. All right. That is pretty much it, lads. Let's have a good week. Don't overtrade. Manage your risk. And I hope that this has given you some insight as to, different types of risk management. Instead of risking both. So if I had moved both to here, it means that the one that I closed out at $14 would have went to a potential minus $113, right? And you don't really want that when you're just trying to minimize risk. $14, I was happy with the loss. Some people will make the mistake and they'll do this. It's at minus $14. I'm just going to wait until it comes here and gets to break even. And then what happens is it doesn't go to break even. It turns out that minus $14 was the best price they were going to get, and it ends up melting away down. And they find themselves, instead of closing out at $14 and just taking that loss on the chin, they'll be like, "Yeah, I'll just wait till it goes to break even." It doesn't go to break even, and then it just melts, and they end up being, from minus 14 all the way back down to minus $300, minus $400 when they didn't need to be there. You see what I'm saying? So risk management is very important. Sometimes you just need to cut that little piece off in order for your account to grow. All right, so don't ever be worried about that. I'm Ryan Mack. This is the Trading Guys. Let's have a great week.